Good afternoon, and thank you for joining me again today. And it's Thursday. It's amazing how fast the weeks go by. And we're all looking forward, I think, effective tomorrow, June 12th, more things are opening up. And I know that people are very much encouraged as they move forward, and we're finding different ways to move forward and try to find a new, I call it the new normalcy. And everyone, I think, is still being mindful of keeping themselves safe. I know that a lot of people are not comfortable, but we'll figure this out, right? Slow and steady wins the race. And so Thursdays, as you know, we talk about money, and money matters. And joining us today, thank you. And please join us, welcoming Leonardo. Leonardo, our favorite guy on Thursday, right? You know,
Thank you.
I was
It's
telling
nice to
you,
have a day.
it's great. And so we're going to talk a couple of things today, and globalization investments and how will it impact the way we spend money as we heal and move forward. So thank you for being here today, and I'm going to let you talk all about this. This is an interesting subject, right? As we all try to find ways to make up ground that we've lost, we're looking for different ways to generate new income and new ways to make our money grow. So thanks, Leo.
Thanks for having me, Sally.
Always a pleasure.
So yeah, I just wanted to do a first quick market recap for what the markets have done for the last week or so. And last week ended pretty strong, and this week started fairly strong with a slide that has lasted from around, I think, Tuesday to today. So the markets are closing down. Dow Jones is closing down about 1,000 points less than yesterday. So been a decline in that sense, and this has to do with a few things. And pardon me if I'm not super up to date because markets close or are closing pretty soon here, so I don't have all the information. But part of the information has to do, or what the press is stating, is that there's been there's a consensus on concerns over many new cases that have spurred up in the U.S., and that may have kind of shaken investors a bit. Now, this doesn't come as a surprise. If you remember, about a month, maybe more so, I had mentioned this thing that I've been saying is like one step forward, one step back, two forward, one back, three forward, maybe two back, and this is a little bit more of that. When we've had a few good weeks of strong markets, and a news item comes out in relation to COVID that's not as favorable or as hopeful, then there might be a little bit of a shakeup. So what does that teach us? Well, that teaches us as investors a few things. The idea that holding the course is very important. So if you do have a plan, sticking to that plan is very important. If you don't have a plan, it is a time to get a plan, because whether it is COVID or not, and once this situation evaporates, there will be other market-related situations coming forward. There always is. There always have been. And the so one, holding steady within your plan, and two is the idea of diversification, which would mean investing in different sectors, regions, markets, and all within your select plan. So essentially, not putting all your eggs in one basket.
Mm-hmm.
And the reason why I say that is because while the Dow Jones, closed negatively today, the Nasdaq Composite Index has closed just as of yesterday. This is yesterday's news on the Nasdaq. It closed in its third consecutive record high, and that's being pushed by tech giants like Apple, Amazon, and a few others. So for the first time ever, the Nasdaq index finished above $10,000. The Nasdaq has been on fire lately. So what I'm trying to say there is the Dow Jones has had a slide, but the Nasdaq did well. One is a tech, one is not. They're both indices, And the idea here is that your money is spread out in different sectors and different regions, or different areas and industries, to ensure that if one has a slow moving period, there might be others that pick up that slack. And that brings us to your question, or answering your question, which is globalization. So this is a sentiment on the street, and shared by some of the calls that I've been on. And this is certainly not there's certainly not me trying to make a prediction, but it's certainly that talk that's going on, and that is, well, where are we on a globalization meter? And the consensus seems to be, and I'd have to agree with this consensus, is that that there we've been in a period of expansionary growth as far as globalization,
Mm-hmm.
and COVID might have brought to attention some of globalization has its big advantages, but COVID might have brought to attention some of the issues with globalization. That includes supply chain, and having access to manufacturing of things that one might need, or a country might need, or a region might need, and being somewhat self-sufficient. So what I'm trying to say there is that there's a consensus that maybe this has taught industry leaders, or perhaps even political leaders, that it could be a good time to deglobalize a bit. So what does that mean on the bigger scale? Well, for me, it means, as somebody who advises people on not only what their financial planning outlook should be, but what kind of investments they should hold to meet those needs, is a is primarily that, even to a bigger regard, that the importance of diversifying one's holdings. So, as an example, we have very popular, within every institution, we have very popular holdings that are North American based, which are great. But maybe now is the time to look at having a portion of those holdings have a global component to it, just in case there are markets that don't do well in North America. There might be global markets that pick up on that slack as well. And I mean, there's data for this. There's extensive data that, sometimes the U.S. market closes a year in the best light. Maybe it might be Canada the next year. The Asian markets might do well the next. But I think it's something for people to consider, particularly if you're relying on your assets. Either if you're having two goals that go together hand in hand, either using your assets for retirement, diversification is key. You don't want it to be severely affected when you need it. But also, if one is looking for one's money to grow over time, ensuring that one can enjoy the benefits of a market that does well, that might not be one of the core ones that people typically look at. That might be an advantage too. So when I advise people, I ensure that this all is matching the risk. But I think I mean, for what I'm taking a look at, is having diversification, more than before, even, is what I'm recommending.
So, what you're saying is that we need to open ourselves up to exploring a percentage of our investment portfolio, perhaps in more global investments. So, are you restricted in a percentage? I mean, there are often lots of restrictions within the investment banking situations in North America. So, are you restricted on the percentage of a client's portfolio that you can invest in, for example, the Asian market?
Yeah. So, yes and no, and maybe. I think maybe is the answer. It depends is the answer.
Okay.
And typically there are many. When we look at a managed portfolio, some of these managed portfolios have mandates, and those mandates are essentially instructions of what percentages should be held within certain rules that are given to the portfolio managers. I've always really liked portfolios that have a what we call a true global mandate,
Mm-hmm.
or sometimes they're called a true go anywhere fund, because at that point the portfolio manager or managers, and it's usually a team, they're able to pick holdings in companies that they see strong potential in, based on on what these companies do, on their balance sheets, on you know on what their expected growth might be, but they're not really limited to how much of a certain market they can own or how little of a certain market they can own. So it's kind of us, giving. It's really cool because it allows the portfolio managers to make the money work for the customer as best as possible with fewer restrictions, and keeping in mind that these aren't like weird, a, weird, kind of yeah, they're not weird speculatory companies. Like they have manufacturing plants for goods that have needs and things, that have a high demand. They all follow the same kind of rigorous
Rules.
rules. So I mean, they're not something, but but I think that's yeah. So I'm really
So
strongly
there are still
invested in that.
controls that, in okay. So there are still, they're bona fide companies. They still have file financial statements, and there are some regulatory restrictions, right, to these
Yeah,
companies.
yeah.
Yeah. Okay.
They just might not be, the portfolio might not be 100% Microsoft. So I think one
Okay.
example would be, um, what's one example? We have a portfolio where one of the companies
Mm-hmm.
is a French biotech company, and they produce, if I recall correctly, they produce containers for medicines, and they're one of the top producers for containers for medicines. So like where the pills go, and a few other things. And you might think, well, what's the importance of that? Well, the importance of that is that this might be one of the few companies that does this specified specific thing in the world,
Mm-hmm.
and they have contracts with very high companies. And we have an example right now where France has had one of its worst retractions France has cut its industrial production by 20% in April. However, this company might not be affected by that because there might be needs from all over the world, because they don't just supply to France, for example. So I think that's an example of a company that does something
Mm-hmm.
specific, that is a solid industry, and that there is a deemed demand for it, and whether uh, you know, whatever the situation might be, there's a high demand for their goods. Taking a look at it like on a different lens,
Mm-hmm.
if you're sitting in China, for example, or India, you might call Apple one of those companies, because that might not be your domestic market, but that's one of the companies that you see, a high demand for, whether markets are good, bad, or so. So I think your perspective is a big, is a big component of that. And another company that I've seen in these portfolios is a global, like, a infrastructure project company. So they get hired by whether governments, municipalities, private companies, to undertake these massive infrastructure projects. Well,
They're
you know, if
huge.
yeah. So if I think this company in particular is housed in the UK, but I might be wrong. But even if it's housed in the UK, that's a global holding, but they're really doing business all over the world.
True. So do you think that, on population, when you think about the population on the planet, that perhaps probably drives, a lot of these companies as well. As you say, they're huge. So the demands of the population globally, if you take the number of people in North America, um, it's really a small percentage in North America versus other parts of the globe. And you look at markets like, yes, you say India and China, um, the needs and wants of the population, I think, drives a lot of things.
Yeah, yeah. And interestingly, you can see on the reports that I've seen where Nike and Adidas have an incredible high demand in a country like China, and the Chinese market composes a substantial part of their business model now. So that's an example of how a market with a lot of people can benefit a stock price essentially.
True, true. Look at that, Nike, just do it. Yeah.
Yeah.
Well, actually, I'm so delighted that you brought this up because, as you know, in the past 3 months, right, right or wrong, sometimes we, have kind of a narrow view, and it's always relationships. It's all about trust, right? And I think people had begun to trust everything globally. COVID has certainly given a lot of people in North America pause, right? So, but as you say, I think that as we move forward, we can't take a narrow view of things. We have to look at where the possibility of growth potential exists.
Absolutely. We always have to do that.
Yeah.
Otherwise, we become stagnant in ensuring that people's hard-earned money is working hard for them. So we have to ensure that people's hard-earned money is working hard for them. And
well, that's good. That's good.
That's important.
So I guess it's back to having sort of, depending on, your level of risk when you're managing a portfolio, what percentage, of your portfolio you give direction to your investment banker, and what direction and what your ultimate goal is, right?
That's right.
Yeah. But then, it's interesting. I mean, I agree with you. I think there are lots of opportunities still that exist. And, you take a look, I mean, as you mentioned, Nike, and you've got Apple and all of these big companies. Without a global market, I don't think they would be where they are today. So
that's correct. Yeah.
Mm-hmm. And, as far as the stock market, as I said, I rely on you now. I don't even bother looking because it's not what I do for a living full time, right? My thing is of course, hard asset real estate, and that's what we're watching. And what we're seeing in our market is we're seeing a bit of pent up demand. We'd like to call it that. As people move forward, then more people are coming out to look at real estate. We're seeing more, depending on the price range, and if it's priced properly, we're seeing multiple offers. Yes, that word multiple offer is existing in the Edmonton market, which is kind of, it's interesting. It's cool to be in, and it's a market that people didn't think would occur, but it always is if it's priced properly. And buyers are pretty smart, even you're smart as to which stocks to invest in, and what has the best place to put your money. So yeah, I think as we move forward, yes, it's kind of a slow start, but things will, right? There's always a demand. You can't sit on the sidelines, even with all of this money. We mentioned this before in the past several weeks ago, right? There was a big sell-off, so that money has to be going back into the marketplace.
That's right.
And so people have to find where to put it to grow. You can't, you can't just sit on it in a checking account in the bank, right? To put it in a very basic English, It's nice to look at, but then it's stagnant. We've talked about, right?
Yeah.
So, but that's awesome. But yeah, so this is great. And one of the things I want to remind people, and you can tell me too, because and is what a 1 hour investment, right? I call it the 1 hour millionaire, right? If you just invest 1 hour, I really believe this, and I ran some numbers. Doesn't matter where you are, especially for younger people, younger investors, right? You invest an hour and come up with a plan with Leonardo here. You can retire a millionaire, and I really believe that. I've run some basic numbers, and it's the frequency of investing. It's investing in yourself. So you may want to correct me, but I don't think that I'm wrong. I think if you start, when you're age 21 or 25 or in your 20s, you can find just have to have a plan, Leo.
That's absolutely correct. At any age, a plan is important. Time is investing over the long term in a sound financial strategy is a component of time and compounding. And the more time that you have,
The richer you become.
The richer you become, because time can work more in the favor of that plan. However, I don't want to discourage those people that still don't have a plan, and might be looking at retirement either soon or are in retirement or are looking at it in a period of time, because there's still a lot to do. So I don't want to discourage people from, if like, oh, well, I didn't start when I was 35 or 30 or 25, or whatever we can figure it out. And knowing where you're going is better than flailing around without a purpose. But if somebody started with investing, I think I was running some numbers, and
you were.
Yeah, I put a age 30 here.
Start your plan at any age is what I say. You have to have a plan.
That's right. Yeah. So in this example, somebody started at age 30, invested in a growth portfolio, and they're retiring at 65. So if they invested $500 a month from age 30 to age 65, their total contribution would be $210,000, but the value of their investment would have been about $1,078,000. So there's really about $800,000 there.
Wow.
Growth. Now, if you start 10 years later, and this is where the illustration of time becomes important. So if you start at age 40 and you're retiring at 65 and you're putting away $500 and your rate of return is 8%, so another great growth portfolio, well, that $1 million becomes about $500,000.
Wow.
So, like I said, I don't want to discourage people. There's still things that we can do at any age, but to illustrate the importance of growth and compounding over time, I think that's an important example where I agree with you, Sally. If you want growth over time, starting young is the way to do it.
So just to recap the second numbers that you ran, starting at what? The first one was 35, right? Age 35?
Starting at age, yes. If you start at age 30, retire at 65, put away $500.
Right.
In a growth portfolio, and the rate of return here, is in line with that growth portfolio. I'm going to use very conservative numbers for the type of portfolio. Okay. So your total contribution at age 30 would have been $210,000, but the value of your investment, its growth, would have been about $1 million. So you've actually grew your money $800,000 over 35 years. So time and the compounding of your holdings worked in your favor to give you about $800,000.
I'm gonna now dub this the quiet millionaire. You never look at it again. Just automatically debit $500 from your checking account. Pay yourself first. So what was the second number that you ran before I let you?
Yeah.
Sorry.
So if this person just waited 10 years.
Okay. 45.
So instead of so they started at 40.
40. Okay.
You're retiring at 65.
Okay.
You're still putting away the same amount of money. but their
Okay.
money only grew 400 and only grew by about $500,000. So essentially, their net growth is $300,000.
Wow. But you'd have at the end of it about $500,000.
You'd have about $500,000. So it's better to have $500,000 than no half.
I'm going to
So
tell you something. When you think about it, right? So if someone right now is 65 or 60 and had in fact been doing this, because if you're 55 or 60 years old today, right, it wasn't that long ago you were 30 and 35 and you never
time
had
goes by quickly.
to worry, because when you go backwards 35 years, Leo, and I'm talking about if you lived here in Edmonton and it's 35 years ago, and then you're faced with this, and then wow, it's $500,000 today is still a lot of money, okay?
Yeah,
And $1 million is still a lot of money.
yeah,
And time just went like this. So I think what people fail to recognize sometimes, it's the value of time. And remember, we all start with time. We're all given, amount of time. No one can predict, but the majority of people, if you look at actuarial tables and things like this, right? You know, a lot of people do end up reaching 65.
absolutely.
Yeah. So it's I think it's the frequency of time that people lose sight of. It's the frequency, you just can't you can't stop investing, and yeah, every month, every month. And for those who can't really physically, take it out, I think the banks always had that in place. You can automatically, just like they do your mortgage, correct? Automatically debit $500, and you're right, start at any age a plan, right? And if you have to press the restart button, doesn't matter where you are on the thing, my recommendation is you start a plan. Okay.
I agree.
You can even start a plan for, right, whatever you want to leave your kids or whatever, you can start even now.
Succession planning is a thing.
Yeah, it's planning. So, but Leo, it's always interesting. And look, the time goes, right? So 20, yeah, 21 minutes for 21 days. This is week 3. So tomorrow, Friday, I have Dr. Lori coming on, and she's an interesting woman. We had her here a couple of days ago. She's talking about living your best life, right? And living
Oh yeah.
with your values. But she's a PhD, a couple of PhDs. But tomorrow she's talking to us about oracle readings. Now, I have no idea about all of these things, but she describes it as similar to tarot card reading. So perhaps one of my questions for her is, so where will the stock market and where will the investment community be in a year? How's that? We'll
Ask
see
for that.
if we can predict the future. So that'll be interesting. Well, thank you. I like this. Start a plan at any age, people. And thank you, Leo, for being here. It's been weeks and weeks and weeks. Oh, wow. It just goes, hey? But
Yeah, pretty quickly.
and we're moving forward. It's exciting to see what else opens up tomorrow. They said effective June 12th. I know that in our real estate industry, the building is reopening with rules. Of course, half the staff are going back. But
Yeah.
what about you guys? You going back to work in the building downtown?
Yeah, yeah. So I go to the office a few times a week. There was a period of time that it was advised not to go to the office, but I think there's definitely a restart in that, and I think customers are now a little bit more open to meeting you at the branch. So
Oh, at the branches? Yeah,
yeah,
sure,
so
sure.
there's
Oh, that's
I've done a few house calls in the last few days as well, depending on customer
how are
preference.
you? How
And
are you feeling about entering people's homes?
I, it's been to businesses, it's it's been fine because businesses already have their protocols if they're open.
Mm-hmm.
So that's that's perfectly fine. In some cases, masks have been worn, depending on the situation, and but in the branch world, they do have a lot of measures in place. There's a
Yeah.
plexiglass that you can have in your office. There's I know that the branches have masks for the customers to wear if they want to wear one and they forgot theirs, and for us to wear as well, and hand sanitizer and all that.
Yeah. So we have to be, I think we have to be cautious as we move forward. And we are moving forward. Everyone is just anxious to get back to a form of normalcy. There will be new rules, but well, thank you, Leo. And listen, people, okay, Leo has a network of people that are available, so don't think that you have to have a gazillion dollars to invest with him. But if you do, he is capable of managing any size portfolio. And so please call Leo anytime at 780-782-0288. And thank you, Leo. I've learned a lot.
Thanks.
I've really appreciated you being here every week for the past many weeks. It's been wonderful. And
To count them.
yeah, and if you're available, tune in. And of course, this actually, you can visit the YouTube channel. This will still be there on YouTube and on Facebook. So rewatch, share with your friends. But the more we know, the more we grow. How's that?
I like that.
I like it too. Wait a
The more
second.
you know, the more you grow. Love it.
That just came to me. But I'm sure someone else has probably used that in the past.
Trademark it. You don't know.
So the more you know, the more we grow. It's so true. I like it. Thank you, Leo. And I'm looking for, you know what? It's so true. And I'm going to put into place some, even at my age, right? You can start that automatic debit thing with $500 a month. So, I mean, yeah, I think I'm going to start that. At least I'll have something if I, in 10 years, in that particular thing, perhaps to leave to a grandchild. Look at that.
Yeah.
Okay. Fantastic. Thank you so much for being here today. And we'll see you again soon. Okay?
See you soon. Bye-bye.
All the best. Bye for now, Leo. Leonardo, sorry.
It's okay.
Bye, Leo. So that was Leonardo Dieste from the Scotiabank. And, every week that I talk to Leo, I learn something new. And it's really, honestly, it's phenomenal. And I'm always happy to pass on and share information. So I like that, Leo. Thanks. The more we know, the more we grow. And as you can see, it is so important to have a plan and start a plan. And these numbers, right? I thank you, Leo, for running these numbers for us, which tell us that, hang on, I'm just going to pop this up. Yeah. Start with at the age of 30, $500 a month, and you never look at it, right? You retire at 65. Yeah. Welcome to Millionaire's Row. And I will see you here tomorrow. Tomorrow, Dr. Lori is joining us, and we're going to learn all about oracle readings. So log on tomorrow, and if you can't be with us live at 1 o'clock, you can always go back and watch. It's always fun, and every day we learn something new. Learn something new and share it with someone. Together, everyone achieves more. So I will see you live tomorrow. Thank you for being here. And don't forget, visit our website at sallymunro.com, where we have all kinds of beautiful properties. And now's the time. Make a change. It's spring. sallymunro.com, or call me 780-441-5457. All the best, and we'll see you live tomorrow at 1 o'clock. Bye for now.